Can you give up your day job for real estate? What really drives property prices? And the importance of a growth mindset. That's what we're going to discuss today.
Are you interested in property investing, success or money? Well, you're in the right place. This is the Michael Yardney podcast, where each week you'll learn a number of new ideas regarding success, property investment and money in 20 minutes or less. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property advice. Now here's your host, Michael Yardney, who has once again been voted Australia's leading property investment advisor. That's the fourth time he's won a similar award in the last 6 years.
Welcome to this week's show, where I'm going to discuss 3 interesting topics to help you make the most of property. And it's been a fascinating year with the property markets changing in front of our eyes. So one of the things I want to discuss with you today is what really drives property prices. And today I'm going to share with you the 3 P's of property price growth. I'm also going to replay an interview that I had on commercial radio a short while ago when I was asked, can you give up your day job for property? The results of that discussion may be of interest to you if that's your aim. And we're going to, in my mindset moment, talk about the importance of a growth mindset. With the end of the year almost upon us, in next week's show, I'm going to share with you the results of a recent property investment sentiment survey, and I'm going to give you a bit of a look into 2018, where my thoughts are going to be. And even though I'm going away on vacation, each week over the summer period, I've got a great series of summer shows with some interviews that I've had with people and people have had with me. So we're going to be here every week over the summer vacation to help you make the most out of property investment, success and finance. But let's get on with today's show, and let's start off with the concept of what really causes property price growth. Have you ever wondered what really drives property markets? Well, that's obviously what the research team at Metropole spends a lot of time thinking about and researching. And there are really 3 things. Firstly, it's people. 3 P's actually: people, price and place. But let's go through that in a bit more detail. People, it's really demographics. How many of us there are, how we want to live. Price, but when we talk about price, I'm not necessarily talking about affordable properties that are cheap. What drives property markets are people's ability to pay for properties, wages growth, interest rates, what house prices actually are, and place, location. So people, price and place. But of all of those, demographics in my mind is the biggest long-term driving factor of our property markets. How we live, how we want to live, where we're going to live, how many of us there are. And every 5 years, the Census comes up with new information to help us understand the changing demographics of Australia. Now, government and big business use it to help their forward planning, and so should you as a property investor. I know it's a critical part of the research that we undertake, and just recently, the latest national census data revealed who we are, where we want to live, what we do, how we work, how we lead our lives. So today I'd like to go through a bit of a summary of that with you. Well, first of all, the Census showed us that Australia's population is well over 24.4 million people. Now, the exact figure moves day by day depending upon the births, deaths, international migration. But when the census was conducted in August last year, it revealed there are quite a lot more of us than 5 years ago, the time before. In fact, we're adding about 1,037 Australians every day since the last census. Look, put another way, since the 2 census periods over the 5-year period between 2011 and 2016, we added roughly the population of Adelaide, Canberra and Hobart to our population. Now, while we're well outside the top 50 countries by population, we're number 6 in land area, giving us a very sparse population density. We tend to, though, live in just those couple of big cities, the capital cities around our eastern seaboard in particular. Now, our biggest state, of course, is New South Wales. It remains the most populous, with about 7 million people. but it's not growing as quickly as some of the other states. Over that last census period, Australian Capital Territory, Victoria and Western Australia grew more than New South Wales. And we know currently Victoria's the fastest growing state, and that's to do with jobs growth and Victoria's strong economy. Another interesting statistic from the census shows that plenty of us, 7 out of 10 of us, in fact, live in our capital cities, and we know that that's growing over time. But what about that old Sydney versus Melbourne thing? Well, it's still the harbour city which wins with 4.8 million people, but about 4.4 million people live in Victoria, in Melbourne, I should say, and that's growing really, really fast. Australia's cities that are growing also include Darwin and Perth. However, not all our cities are growing at this pace. Census showed that Hobart, Adelaide, Brisbane and Sydney didn't grow as fast as those other capitals I just mentioned. But we're not only a collection of big cities, we've also got a lot of little towns. Birdsville, with a population of just 115 people at the 2006 census, now has a population of 140 people. Another thing the census showed us was that Australia's once youthful population is ageing slowly. Our median age is now 38. In 1911 it was 23, 28 in 96, 37 in 2011, so slowly we're getting older. As our baby boomers mature, we're finding that 1 in 6 of us is now over 65, compared to 1 in 7 in 2011 and 1 in 25 in 1911. Now, if you're getting all bamboozled by these statistics, don't worry too much. We're really talking about the big picture trend. But the concept is, as a property investor, you're going to have to understand what sort of properties are going to be in continuous strong demand in the future. So it's important to understand how we are, how we live, where we want to live, what our age group is, whether we live in families, whether we live singly. Because if you're an investor, you've got to own the right sort of properties. If you're interested in getting involved in renovations or development, similarly, you've got to understand these big demographic trends. And the greying of Australia continues with 84,000 more people aged 85 or older in the census. Interestingly, women are living longer than men. Of those people aged 65 or older, 54% are women, 46% are men. Okay, where did we all come from? Well, the answer is almost everywhere. Australians were born in close to 200 different countries, meaning people from all over the world are part of our diverse nation, with more than 300 languages spoken in our homes, including sign language, believe it or not. There are more than 100 religions and 300 different ancestries picked up by the census. So where do you think people come from? People born overseas or who had at least one parent born overseas made up almost half, in fact 49% of our entire population in 2016. You've just got to walk down the street and you can see the changing face of our nation. And of course, more and more of our migrants came from China and India. The census also looked at our religions. Now, look, this doesn't actually have a lot to do with property, but I actually did find it interesting to see that 60% of our population still reported a religious affiliation, but obviously more of the younger people tend to report no religion. Now, I remember a number of years ago, the last census, a lot of people reported Jedi as a religion. That number's down now. Maybe it's a move to the no religion, or maybe it's just our minds drifting from that galaxy far, far away. Looking at the money thing, the census gave us a lot more details, and that's where we do a lot of our research at Metropole, just looking at where people's wages have grown, because overall, while wages grew in some areas, wages grew in some municipalities, wages grew significantly more than others, and that's where we pinpoint our research to find areas that are gentrifying and areas where affordability is going to increase. Now, the census found we have almost 10 million dwellings in Australia, and while separate houses accounted for most of the homes in Australia, about 72%, there's a large increase in other forms of dwellings, such as flats, apartments, semi-detached, row housing and townhouses. In fact, the number of people living in townhouses increased significantly. I guess it shows more of us still want to have an attachment to the land, but we're prepared to live in modern dwellings on more compact blocks of land. Of the 8.3 million occupied dwellings, 69% had one family in them, and 1.9% actually had multiple families. 1 in 4 were one-people households, and 1 in 25 were group households. So there you have it. The story of our Australians is told by the Census. As a nation, there's more of us. We're living longer, becoming more urbanised, becoming more diverse, less religious, living closer together, earning more, and forming the same type of family units as we always did. This is how we live now. How are we going to live in the future? Well, there's going to be more migrants. We're going to be getting older. There's going to be more single households. So if we go right back to the beginning, we've got to understand the type of property that's going to be in continuous strong demand by a wide range of people. But we're also going to have to find those areas where people's wages are going to allow them to be able to pay for, and they're going to want to pay a premium to live there. So we're going to, as we dig into the census, look over the future podcasts as to how we choose areas where wages outperform the averages, because that's where you should be buying, because that's where property values are going to increase more, because people's disposable incomes are higher.
If you're looking to get started in property or to grow your existing portfolio, turn to someone you can trust for independent advice. The team at Metropole Property Strategists have been involved in over $2 billion worth of property transactions, creating wealth for their clients, and they can do the same for you. They don't sell property, so their advice is independent and unbiased. Metropole can devise a strategy, their buyer's agents will buy your property for you, or you could use their renovations team, property development or portfolio management services. Arrange a time for an obligation-free chat at metropole.com.au. Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
If you're a regular listener to my podcast, you know that every week I have a regular mindset moment, and some people dismiss this section, not thinking it's important. But I want to remind you why a growth mindset matters. Look, I remember years ago reading in Napoleon Hill's Think and Grow Rich book, whatever the mind can conceive and believe, it can achieve. And there's quotes attributed to Buddha that says, the mind is everything, what you think you become. Look, we've all heard these sort of high-minded quotes all our lives. But interestingly now, science has caught up. We can finally quantify and track how beliefs shape our outcomes. Stanford psychologist Carol Dweck found that some people have what she called a fixed mindset, and they believe they can't change their capabilities. And other people had what she called a growth mindset. The growers believe that they can work towards improving themselves. So Dweck and her colleagues studied 373 students and tracked their academic performance from the beginning of the 7th grade to the end of the 8th grade. Now, sure, they were kids, but she found that those with a growth mindset think I can themselves to a rise in grade points, while those with a fixed mindset remained the same. It's also been shown that if before taking an IQ test, people read an article saying that IQ is changeable instead of fixed related to their genetics, their IQ's scores improved as well. So this is one of the biggest tenets of personal development. Simply believing change is possible makes change possible. Now, of course, it makes it possible. It doesn't actually make it happen. You have to take action. And as I've explained frequently, your thoughts lead to your feelings lead to your actions, and your actions lead to your results. So it all starts with the inner self, your thoughts and your feelings leading to your outer world, your actions and your results. So my question to you this week is, in what areas of your life do you need to move from a fixed mindset to a growth mindset? And what are you going to do about it?
If you're enjoying our show, please subscribe on iTunes. You'll find us there as Michael Yardney Podcast, and we'd really appreciate it if you would leave us a review. When you do, we'll read it out on the show. By the way, Michael creates a lot of content he only sends out by email, which you can have with no obligation. So also visit michaelyardneypodcast.com and subscribe to his commentary there.
Now, I have a number of regular media appearances, including Sky News and radio segments in 4 states. And one of the ones I enjoy is my session with Angus Campbell from Harcourt's Real Estate Adelaide Hills on 5MU. And recently he asked me about the concept of giving up your day job for real estate. So let's have a listen to that interview.
Welcome back to 11:25 5MU. This is the Real Estate Wrap with Angus Campbell from Harcourt's Adelaide Hills. Guest number 2 lined up and ready to roll.
I'm a little bit in awe of this guy, Claire. I've been listening to his podcasts recently. He really does know his stuff, and he's been doing it for a very, very long time. He's been voted Australia's best property strategist. It's Michael Yardney from Metropole. These guys are based in Melbourne, and they are servicing Australia, the entire country. So if you like what Michael's got to say today, it's worth actually doing a bit of a Google search, listening to his podcast and getting involved. Good morning, Michael. How are you?
Good morning, Claire. Good morning, Angus.
Yeah, now, look, you're setting people up for success. You're a very positive guy. When you listen to your messages on your podcast, it's a little bit different to what you get with the messages out of the United States, where it's all chest thumping and back slapping. You seem to be quite a realist with your strategies. So people want to know, how can they give up their day jobs and create a passive income through investment properties?
That's a good question. A lot of people want to know that, Angus, and the answer is it's not easy. In fact, most of what you hear about wealth through property is incorrect. If you get the same emails that I do, you probably learn that you can get 7 properties in 7 minutes or 10 properties in 10 years, and it doesn't work that way. Real estate investment is a slow game. It takes 15 to 20 years to build significant wealth, and in my mind, there are 3 stages, Angus. The first one is that of asset growth. So you first have to build assets by owning good, what I call income-grade properties. Then once you've built up an asset base, you slowly lower your loan-to-value ratios. So in the meantime, you've got to have a real job. You're not going to suddenly buy 2 properties and give up your job. And then eventually, as you lower your loan-to-value ratios, then the cash comes out. But to me, residential real estate in Australia is a high-growth, relatively low yield. In other words, you don't get a lot of rent investment. So you've got to build assets. And when you've got an asset base, you then use that as a cash machine, Angus.
So how many properties am I going to need to retire on $100,000 a year?
That's a good question. But, mate, I'd rather own one Westfield shopping centre than 50 properties in regional Australia. So it doesn't matter how many. It's not the right question. The question is, how big an asset base do I need? And then how hard is my money going to work for me? And that's the reason why most property investors fail, because they go about it the wrong way. The statistics show that most property investors in Australia fail. By that I mean 50% who buy a property actually don't hold on to it. They sell up within 5 years. Half the people are get in, get out because they bought the wrong property or got the wrong finance or not got it right. Number 2, those who stay in, 92% never get past their second property. So 2 properties isn't enough to retire on. And the answer really is, it's not how many properties, but you need a couple of $1 million worth of net assets, probably $3 or $4 million, and your own home. So it takes time, Angus.
Yeah. And then you've got capital gain versus yield. Say, for example, you buy a property for $500,000, but you're getting a decent yield versus a decent capital gain. There's a bit of a difference there, isn't there?
Well, that's right. There's 2 camps in Australia. You'll find the capital gains people, which is basically what I said, that you build an asset base, and then you'll find the cash flow crew who buy property to get cash flow. The trouble is cash flow will never get you out of the rat race. Cash flow will keep you in the game, so you definitely need cash flow to be able to service your mortgages and take time for your assets to grow. But it's capital growth, assets, the value of your assets, that's going to get you out of the rat race. And that's what gets you your next deposit. It's too hard if you get $10, $20, $5 a week positive cash flow at the end and pay tax on it. It's too hard to get your next property and your next property, Angus.
It's become popular now to flip houses, Michael, to buy something that's a little dodgy, give it a little makeover and then move on to the next one. Is that something, and we see a lot of American shows, TV shows based on that, are Australians in a position where we could do the same thing, look at flipping houses?
You'd be been watching The Block, haven't you, Claire?
She loves it.
Amongst others, I love house flipping shows. It's my thing.
The answer is it doesn't work in Australia, Claire, because of our stamp duty and our tax rules. So it does work overseas and it does work in America. But if you think about it, in Australia, if you buy a property, you've got to pay about 5% stamp duty plus some other taxes, etc., conveyancing. And then when you do the property up, it increases in value. But then when you sell it, what you have to do is pay agents' commission, and you've got to pay the interest along the way. And then there's 60 days until you settle, so you still got to pay interest. And then when you make some money,
I think your brain just
make some money,
exploded.
then you've got to pay tax on it.
That's right.
What I would rather do, I love the renovation concept. You're right there, Claire. But what you do is then once you've finished, go back to the mortgage broker or the bank and say, hey, look, my $450,000 property is now worth $550,000.
Yeah.
Can I please refinance? And you take the money out, and guess what? You don't have to pay tax on it because it's not a profit; it's a loan.
Ah, right. So you use
Yeah.
that to buy your next property and then you move on from there.
But you can also set up yourself with an income based on that, given that you've got a portfolio that's big enough down the track. So how long is it going to take us to get to that stage, Michael?
That's really interesting because I remember somebody asking me that recently and I said 30 years and they were really disappointed. And why I said that, guys, was because the first 10 years you usually have to learn what not to do. Most investors get it wrong. They buy close to where they live or where they want a holiday or where they retire. So we've got to work out what not to do. And then if you survive that, what you have to do then is unravel selling their secondary properties, and then it takes 2, maybe 3 good property cycles to build an asset base. Of course, you can shortcut that by doing it right up front, by getting some mentors and getting some good advice, and not doing what the average person does, but doing what that small group of successful people do.
So you're a mentor. So you have successfully achieved all this for yourself, haven't you?
Well, I have, but again, I'm 64. People say to me, Michael, now that your candles cost more than your birthday cake, why are you still doing it? And the answer is, I think you can hear I'm having fun. I'm passionate about it. I enjoy it. So I've made all those mistakes. So the only reason I'm smart, and I'm not that smart, is because I've learned from my personal mistakes and from the clients we've seen. And as you said, we've got clients from all over Australia. We've got offices in Melbourne, Sydney, Brisbane, and I have people I've mentored I've mentored over 2,000 people in the last decade. And so I've learned from my mistakes and from the mistakes and the successes of other people.
So if someone wants to learn from your mistakes, Michael, how would they get in touch with you? Are you going to keep doing this for another 10 years?
Well, I've committed to my team and others at least another 5 years, and my kids say I'm probably going to go out doing this. Look, interestingly, I'm sitting here having a coffee, having a chat with you, talking about real estate, and I get paid for doing this. If I wasn't here, I'd be downstairs at the restaurant having a coffee and talking about real estate and not getting paid. So why wouldn't I keep doing it?
Well, that makes sense to me. Fantastic, Michael Yardney. Thank you so much for letting us take up some of your coffee time today.
My pleasure.
Thanks for joining me on this week's show. And thank you for all those people who've left reviews on iTunes. And if you're getting some benefit from my show, I'd like you to do me a little favour. First of all, tell some other people about it. The audience has grown fantastically, but it inspires me to keep giving you the content. And I'd also appreciate if you left me a review, and we're getting lots of reviews on iTunes, and as promised, I'm going to read them out. And over the last couple of weeks, I've had a couple of reviews one from Anastasia, who said, fantastic information to get me started. Thanks for the information. Well, thank you, Anastasia, for leaving the review. One from Priyana Navy, who said, excellent listening. I always listen to Michael's podcast on my daily walk. Highly recommended. Thank you, Rihanna. And MR Prop said, all you need to know about property investment. Wow, that's great. Another great resource from Michael Yardney. Fantastic podcast from Michael that really is your one-stop shop for anything news and information related to property investment. Wow, that's nice wording. Thank you, MR Prop. Of course, you can always get in between the podcasts information through my Property Update app. Just go to Property Update and you can get that on your smartphone, or my Property Update blog. Next week, I've got a great show for you to finish off the calendar year, where we're going to give you some feedback on the recent property investment sentiment survey I did with Your Investment Property magazine. Plus, I'm going to give you some thoughts, some insights into 2018.
Thanks for listening to this week's episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect and pass on their wealth through strategic property advice. If you got value from listening to this podcast, please leave us a review and we'll read it out on a future show. Just go to michaelyardneypodcast.com/review and it will take you over to iTunes where you can enter a review and let us know what you think. We'd really appreciate it. If you don't already subscribe on iTunes or on your Android phone, you'll find us there as Michael Yardney Podcast. If you'd like to gain instant access to the show notes or a transcript of the show, head across to michaelyardneypodcast.com. Watch out for our show next week. You'll learn some new ideas about property investment, success and money in around 20 minutes.